it seems all's on track for the listing on the 8th of April. Looking at why you're actually going down this route, the aim for now and being highlighted is that it's to attract new institutional investors and not as a capital raising initiative. In accessing the European markets, I mean, what appetite are you actually catering to here?
Well, I think there's a couple of things we're looking to do. I mean, first of all, we need to be compared against our peer group. In South Africa, where we're currently listed, we're one of 3 oil and gas companies listed on the oil and gas board. But of the 3, we don't really have a peer. We've got Sacoil, we've got Wanda. And for us and our shareholders, for our assets to be properly evaluated, it's better for us to be placed in a peer group that actually understands oil and gas, and certainly the AIM market offers us that. Yes, you're right, we're not actually looking to raise any capital on admission. We would look to raise capital post-admission, but the attraction is that we would look to introduce more European capital into what is a very capital-intensive business, oil and gas. But equally, we don't want to lose our DNA and what makes us attractive.
Yeah. You say post-admission. Just how soon could we possibly see you coming to the fore to raise capital via this route, or is it still too premature to make assumptions in that regard?
No, I think it'll be this year. I think it'll be 2011, quarter 2, quarter 3, 2011. We would look to go to the market and raise some capital.
And that's the primary funding alternative, or are there other alternatives that you could be exploring?
Well, we could have explored other alternatives, i.e. go around the South African market and continue looking to interest investors. But I think the reality is, although we've done very well in getting South African institutions to invest in us, the wider interest certainly lies outside the African market and certainly the European market. That said, we certainly don't want to lose our DNA and what makes us attractive to African governments when we go and look for acreage. And that means we are still talking to retaining a headquarters and a base, a management and control here in South Africa.
Because you've certainly been busy on that acquisitive front. I mean, looking at some of the ventures you've been involved in, your JV with Nigeria's energy equity resource, I mean, that's for an offshore Niger Delta oil asset, which has a potential, peak production of 30,000 barrels of oil a day. Are you still expecting to produce oil at that JV in the next 12 months?
No, I wouldn't say 12 months. I'll say 18 to 36 months. It's actually onshore Western Niger Delta. It's OPL 281 is the asset that you're talking about, and it's an asset that has already got 2 wells drilled on it. So there has been encounters of hydrocarbons on there. It's not wildcat frontier exploration. It's more near-term production.
What does the JV afford you in terms of muscle? Because I was reading that you can now acquire oil and gas assets disposed of by international oil companies as a result of Nigeria's indigenization legislation.
Correct, and you mentioned Nigeria's indigenization legislation. We're a South African company. Clearly, when we go into Nigeria, we're not indigenous. So to qualify for the indigenous acreage, we've had to partner up with a local indigenous firm that ticks the boxes in terms of being an energy company, being recognized as having worked in the energy space and owned acreage. Energy Equity Resources ticks those boxes. What Energy Equity Resources enable us to have is an entree into acreage in Nigeria. We signed a joint venture agreement in October last year, and we came on and we presented our joint venture to you. In November, we announced our first transaction, which was OPL 233. And only a month ago, we announced our second transaction, which is OPL 281.
Of course, making significant enough stride there when it comes to acquiring near-term producing and production assets in Africa, so beyond Nigeria. Let's take a look at progress there, because we've recently heard of your involvement in the DRC via partnership with Total.
Yes, well, look, we're an African play. We're not a Nigerian play. We're not a DRC play. Our intention is to acquire acreage that is across the spectrum in terms of upstream, so from exploration right through to near production, but on the African continent, so we're very Pacific. But in terms of, we've got assets in Nigeria, but where we started was DRC. I mean, Block 3 in the Albertine Graben was the first address that we acquired, an exploration asset, but clearly highly prospective and an asset in the right address. Hence, we were able to attract a super major, which wouldn't typically come into an asset at this stage to come into our asset at a very early stage.
Yeah, of course, here in South Africa, the PIC has close enough to 7.5% stake in the company. What are the benefits of having a shareholder like the PIC here in South Africa? Because it seems that investors have really shrugged off those initial worries about dilution.
Well, look, the PIC is clearly a significant investor. It's an investor that, if you have a PIC as an investor in you, it gives you some sort of stamp of approval, a validation from a significant investor. But the PIC clearly saw value. I mean, the PIC has only come in for value, and if you look at our acreage and what we've managed to achieve in the last short while, and the way our share price has moved, it clearly points to an underlying undervaluation at which they spotted an opportunity.